There have been several significant developments in the realm of economic stimulus. The global economy continues to recover from the pandemic-induced downturn, and governments and central banks are taking various measures to support growth and combat inflation. One major development is the announcement by the United States Federal Reserve that it will begin to taper its asset purchases. The Fed had been buying $120 billion worth of bonds each month to support the economy, but it has now indicated that it will start reducing these purchases by $15 billion per month. This move is seen as a signal that the Fed is confident in the strength of the economic recovery and is taking steps to prevent inflation from getting out of control. However, the tapering process is expected to be gradual and may take several months to complete. In addition to the Fed's announcement, the Biden administration is pushing ahead with its plans for a $1.9 trillion economic stimulus package. The package includes measures such as direct payments to households, extended unemployment benefits, aid to small businesses, and funding for COVID-19 vaccinations and testing. The package has already passed the House of Representatives and is currently being debated in the Senate. Some lawmakers have raised concerns about the size of the package and its potential impact on inflation, but the Biden administration argues that the benefits of the package outweigh the risks. Meanwhile, the European Central Bank, ECB, has signaled that it will maintain its accommodative monetary policy for the time being. The ECB has kept interest rates at record lows and has been buying bonds to support the Eurozone economy. However, ECB President Christine Lagarde has said that the bank is closely monitoring inflation and may adjust its policies if necessary. In China, the government has announced a new economic stimulus package worth 3 trillion yuan, $470 billion. The package includes measures to boost consumption, support small businesses, and invest in infrastructure projects. The move comes as China's economic growth has slowed in recent months, due in part to the effects of the pandemic. Overall, these developments suggest that governments and central banks are taking a cautious approach to economic stimulus, balancing the need to support growth with the risks of inflation. The Fed's tapering announcement is a clear signal that it believes the economy is on the path to recovery, while the Biden administration's stimulus package is aimed at providing further support to households and businesses. The ECB's stance reflects the more uncertain economic outlook in Europe, while China's stimulus package highlights the ongoing challenges facing emerging economies. It remains to be seen how these various stimulus measures will play out in the coming months and years, but for now, they represent a concerted effort by policymakers to support the global economy.